Good morning, everybody, and this is your Dow Jones day trade setups for today. So, a couple of things brewing on this chart, which are a little bit different to the S&P. Firstly, diversions. Look here, diversions. Also, a clear break of the range. There's the range, and we've had a clear break of that yesterday. Now, I'm not going to read too much into diversions just yet, because if you look at this on the weekly, it's a much bigger bullish picture here, and this is a break of a flag. So we do have a lot of chaos to the left, which will definitely impact price, and I just want to put that tail in place because that is something we definitely do need to pay attention to. And I can just fine tune. No, there it is there. Okay, so if you just have a look at that structure, look left, there's a lot going on, and we have got a clear break of that. Now the question is it an exhaustion break or is it a break? So we did have a separation of the oscillators. You can see moved up and then came together, and this is on the 3 hours. So I suspect this is just ranging, so we're probably going to just drift sideways or drift lower, come and find support for another attempt to get through at a decent pace. So don't forget, you are without videos next week again, so probably a perfect opportunity to practice what you're learning. And don't forget to hit that thumbs up button. So if you look at the hour, now we can bring this down. There's a clear break of a daily high here. That happened yesterday, late in the session. That's 35,110. So from an hour perspective, I'd be looking for a retest of that, or even better, a retest of this 3,500 area. You see we've broken through it. Might not be exact. It could be this tail, it could be that tail, and it could be that tail. So the trick is you have a range. So you're coming down here, you'd be looking for a stop. It's 150 point stop loss, basically, that you'd be looking to put into play. So 150 point stop loss, work out what your risk would be for that, and then you're looking for a move up. Now, the challenge that you've got at the moment is you're coming into the Thanksgiving weekend, so you've got the Fed minutes later tonight. So the way this could play out is just drift sideways, go nowhere until tonight, and it's 9 o'clock my time, which is quite late in the day. And then you probably got an hour or so, hour to 2 hours, basically, of potential trading that may happen after the Fed minutes. So if the Fed minutes just confirm what the Fed meeting was 2 weeks ago, you'll probably see us just continue drifting higher. If there's something in the minutes which they didn't talk about in the meeting and in the press conference after the meeting, depending on what that noise is, it could be negative noise or it could be positive noise, you're going to get a spike. I don't think you're going to get the spike, to be honest. I think what they're trying to, well, they're not trying, there's nothing they can do about it. The bond market is starting to fall, so there's definitely scope for interest rate cuts. So the big question is whether it is early next year, late next year, or like next month. You just don't know what they're going to do. So at the moment, I'd be very cautious of anything on the US markets. You've got too many triggers, and then you've got the long weekend. So I'd be very cautious of jumping in. But nevertheless, this is the most logical area for me here, which is 35.10. We've got a lot of gaps to the downside, so this level could also come into play, 35.016 or 3500. And your stop area is going to be below this 34.858. Just bear in mind there are a whole lot of gaps here as well from yesterday's chaos, so those could also be acting as magnets. So I do suspect we're going to just drift sideways, to be honest. I don't think there's going to be anything in the Fed minutes that's going to act as a catalyst, and then you're going to have all the feel-good vibes of people going on holiday and long weekend in the US. So you're going to find a lot of traders that would have taken tomorrow off, and then there's going to be other people that will be taking half day tomorrow. So your volumes, your trading volumes, are just going to be low. That's basically what it boils down to. And low volumes means that they can't really move the market in a clear direction. So unless there's a lot of noise that's going to come through today or tomorrow, I think we're probably going to build a base and just bounce around here. If the Fed minutes are extremely positive, then you're going to see us bounce quite aggressively, and we're going to close on a high, which is also, again, linked to the holiday mood, and also the start of the Santa rally. So yeah, that's kind of where my thought process is on this. So may not be able to get in on a decent trade today or tomorrow, and then obviously you've got the 2 holidays. So then Monday is probably the closest day that you're going to get an opportunity. So for me at the moment, it is get down to the lower time frames, pay attention to what you can see, and if you look at the 5 minutes, you're going to see there is multiple levels here. All these tails and those 2 tails there all offer the opportunity for a trade, and you can see how sideways we are in amongst all the moving averages here on the 5 minutes. So you're looking for an area of support, and you're looking to buy off that for a potential break higher, and that break higher, if you look at it on the weekly, is going to be to target this area right here at 35,642. Okay, anyway, that's kind of my view this morning. Just be very cautious. Don't just jump in for the sake of jumping in. It's not going to get you anywhere. Wait for the structure. If there's clear structure, then take the trade. And you're only looking to be trading to the upside. You're not looking to short this market right now. Hope it helps, and we'll catch up with you tomorrow morning. Cheers for now.